Yesterday was FOMC, and in my opinion, it was very influential to where we're going to be going, which I believe is new all-time highs very soon. We look at the S&P 500 and the NASDAQ 100. We'll go right into why I believe that. The NASDAQ is definitely lagging, getting hit on the day with semiconductors, definitely lagging behind. But you look at the Dow and you look at ES, and you are moving. So when you look at SPY, let's talk about where you're at. Now, number one, you opened up the day with some sell side. Obviously, we gapped down, pushed on to 682, quickly found buyers, and pushing right back towards all-time highs, 689, 690 roughly. That is what we're looking for right now. You look pretty decent. Now, where you're seeing a lot of the weakness is over here in QQQ, which QQQ is still below that previous level right there. 625 is where you want to mount. But I want to make this very, very clear. When you look, and I say this a lot, but when you get quick sell side or you wake up and it's a flash drop, you get a lot of information from those drops. Even if you're trending the upside, the sell side gives you a lot of information, whether you should be expecting weakness, continuation, or what's happening with the overall sentiment. Has something changed? When we look at NASDAQ, again, it's going to be a cluttered chart, so hear me out. But when you look here, the main thing that we've been watching, I've been posting this on Twitter nonstop, is that retest of this October 10th high. That was the same day that Donald Trump came out and started talking about China tariffs and all that shit, right? Well, guess what? You've tested it once, twice in the last like 10 hours, basically since last night, okay? And you are bouncing off this level on repeat. So we bring the level back up. You can see you are finding buyers immediately. Now, the other part that's interesting is you go to Dow. This is, again, Dow Jones, which today is at all-time highs. Some new all-time highs broken there. You can go look at DIA if you trade that. All-time highs there. Now, what gets even more interesting, because typically I would say, like, look, if NASDAQ is lagging, then I'd be kind of weak on the market. But when you look at one of the biggest markers for risk on versus risk off, people wanting to put their money in the market rather than keep it off the market, right? IWM, the Russell, continues to break out 253, new all-time highs here as well. This is what you want to see, right? This is a risk on sentiment if I've ever seen one out there right now. Now, again, you still got some work to do on futures, but I still believe you look really strong. And again, if you would just show me this SPY chart blind waking up and you'd be like, hey, do you think the NASDAQ dipped down to your 25.4 level? I'd be like, probably not. But again, very, very, very impressive. And you're just right back to where you were yesterday. So again, I had a video posted last night. I just forgot to literally hit publish. So I just didn't post it because I noticed it like midnight. So yeah, it sucks. But anyways, you look very, very strong as of right now. Now, some of the pullbacks here, you can see SMH had a little bit of a pullback, had all-time highs yesterday, pulled back into 264, bouncing back up. You look fine. You saw NVIDIA take a most of the hit this morning, dropping from 184 at the end of yesterday down to lows of 176, 177, but bouncing back up. In my personal opinion, this is a stupid sell on NVIDIA. And if there's been a buying opportunity, congratulations, you probably got it again. So again, I like NVIDIA a lot here. Big fan, very, very strong overall. But you go look at the other big semiconductors, AVGO sitting near all-time highs, TSM, again, looking very good. Had all-time highs yesterday, came back down, but still trying to get back above 307. ASML mounting previous all-time highs there. Again, this is just what overall you like to see. I would like to see AMD get back above overall 227. Again, that's your previous all-time high back up there. But what you would like to see right now. Now, the one area of the market that's definitely struggling with the NASDAQ is going, or with SMH, is going to be XLK, the tech ETF. But again, it's our same level. I'm not changing this. If you guys follow the channel, if you guys watch the videos, again, you understand I'm not changing anything. These are all the same levels. You're retesting and finding buyers. That is a very good sign when you're coming down to support and it's immediate buying on support. That means buyers are active, buyers are aggressive, buyers are actively looking to buy. That is what you like to see. Now, on the downside, what you would be looking for is a flip of these levels, right? Breaking below 25,000, retesting, sellers getting aggressive, pushing you down. But it's quite literally the opposite. And you look at these daily candles here on the NASDAQ, again, very impressive. A lot of buying, a lot of wicks. That is what you like to see, okay? But again, you look pretty decent, look pretty solid. I'm happy with where we're at right now. Now, that being said, again, if you guys, before we go too far, I want to say, if you want to see what we're trading, how we're trading, the Discord link is down below. We go into our futures trades, our swing trades. We go into our technicals for our scalps. All of that is all there for you. If you want to get more information, the link is down below. Check it out, all the profits, etc. Do what you got to do. And of course, we have education, which I recommend you do first. When you join, go over to education and make sure you watch the webinars. They're there for you. But I have not been doing a lot of intraday day trading. I want to say that right now. And again, I think the market looks good, but when you look at what you're doing on NASDAQ, this is the one thing that's, disheartening, right? Since Monday morning, you've basically been in this range. Okay, this is Friday. Let's go all the way back to Friday. Okay, let's just do for what it is, right? So Friday, you set this range, and then you kind of sit in this all week long with a few wicks to the up and to the downside. Okay, so you saw the wicks into our level up here, 25.87. You saw our wicks down to 25.4 down here. So you've had a few wicks, but 90% of the time of this past week, it's been a range back and forth on NASDAQ. Now, why is that important? Why am I telling you that? Because primarily when I'm day trading, it's 90% of the time it's stocks inside the NASDAQ. Okay. So I want to make that abundantly clear. So when you're in a range like this, you're not going to get, for me at least, I'm not going to get a lot of opportunities trading my favorite names, right? Whatever it may be, because they're not getting the continuation that I really want to see. Overall, it's a lot of back and forth. You might have to get in, get out. And again, that's just what's going on right now. So if you're taking less trades, just understand I'm in the same boat, right? Just trying to be transparent, totally honest with you, as always. And I also did post this last night. I just want to be like totally transparent. So I posted this last night and I totally expected to take an L. I ended up not taking an L. So count my blessings. And hopefully this is an educational moment for you guys as well. Just going into like my mindset, what I'm doing when I just will get out of a trade quick, whatever it may be. So going right here. Yeah. So I posted this last night. I got to take my first fat L in a while. This is why you wait for NQ to break those levels. Luckily, I wasn't super aggressive. Now, again, the trade that I mentioned, and I want to just go over this because again, I think it's important to share good trades, bad trades, etc. So I mentioned in trade ideas, which is one of my swing trades. I mentioned CRM yesterday, buying calls 4.3, a 200 MA bout, looking for that break into towards 276 right there. That's what I was looking for. But you opened up this morning, going into CRM, you can see we kind of opened up a little choppy, nothing crazy, but you ended up popping into 267, which also was that high from back here on October 21st. I still think CRM is a really good stock and still trending up, looks really solid. But again, like the contracts are up like 12, 15%. I was like, let me just get out of this trade, whatever. Ended up posting it, told Discord, do what you got to do, as always. But yeah, so I'm really lucky, didn't take a big L there. So that was actually awesome. I saw the green. I was like, get me out of this shit, right? Especially because the market was getting hit to the downside. So worth mentioning where we're at right now. Now, going into the rest of this week, the rest of the, end of the year, overall, I'm pretty happy with where we are and how we're moving. If you go back and look at the Fed recap, I recommend, this is probably the best recap that I've seen. This is from CNBC. Just type in CNBC Fed recap. It should pop right up. This is what it looks like. And again, this goes in detail with every single thing out there. So I will say, like, as every single thing that was kind of bullet pointed from the Fed meeting, you get those into ChatGPT to get a better look as well. But one thing that I do want to say, and go down really quick. So Powell's main focus was unemployment and inflation. However, I've gone very deep into what's happening with CPI, core CPI, PC, etc. It's not really rising at all. It's just flat. It's not dropping significantly. You're just basically just slowly just ticking out of spot right now. So inflation's not rising. Powell was very clear about that as well. He even said, if you, in this article, I think is a little bit more bearish, I will say, than it was yesterday. The Fed meeting was very strong. Powell was praising AI, the advances to our GDP and what's happening overall in the growth. But again, their main concern was unemployment once again from Powell from this meeting. And that's really where their focus is. Now, this is the biggest thing that I want to talk about, and scroll really kind of far down here. So let's go really quick into what happens with when rate cuts happen when we're not in a recession, right? That's a big part. So let me actually just click search recession. Okay. So how the market performs after the Fed cuts without a recession. Okay, this is data going back to the market, not Tyler's data. This is UBS doing this. So again, I don't want people to say that I'm tinkering this. UBS noted that stocks historically perform best when the Fed cuts in non-recession periods. Citing 1970, the S&P 500 averages a 15% annualized return when the economy is not in a recession and the Fed cuts rates, which is in line if we look over last year and a decent move into this year. In our view, the macro environment will likely continue to be in the most favorable condition through the early part of next year, supporting the equity market's next leg up and robust earnings, which again is exactly what we've been talking about. What are robust earnings? Again, we look at what's the revenue coming in the Mag 7 combined revenue. It's upticking. Quarter 3 is outperforming quarter 4 of last year, which never happens. CapEx spend, they're spending more money than ever. So again, this little cycle should continue as well. People being bearish on Nvidia or chips or a bubble. Again, if these companies are supplying the money to the bubble companies, can the bubble pop right now? I don't know. We'll see. But as of right now, it's supporting the argument that we've been talking quite a bit about here. So as far as a rate cut being bearish, again, people only go with data that sides with their viewpoint. I'm just showing what's happening. You aren't in a recession. You aren't in a bubble right now. You aren't seeing weakness overall in the stock market. You're damn near at all-time highs, and you're getting rate cuts. And then we also have Fed Powell leaving the office most likely into the early part of next year as well, which we know when Hassett comes in, it's going to be very, very aggressive on rate cuts. So just do the math for yourself. Very important to understand that. Now, again, what you're coming out right now is the China DeepSeek stuff happening. I'd keep an eye on it. Not super interested. We'll see what happens. It's also worth mentioning on Twitter. I recommend you guys follow on Twitter. I post nonstop on there now, giving you as much updates as possible. I'm doing a lot of small videos or short videos as well to keep you guys updated on what I'm looking at in the market, different opportunities. I actually like posting on there more than YouTube. There is a real chance that I stop posting on YouTube nearly as much and I start focusing solely on Twitter, just based on how the rules on YouTube are working and how they've been banning me. So I just don't know if that's going to be in my future long term. We'll see, but I do appreciate the follows. The White House also said here, again, further going on with the viewpoint of the H200, chips will be shipped to approved customers. So again, once customers start rolling in for NVIDIA's H200 chips to China, you're going to see buying. You're going to see NVIDIA get a little bit more aggressive to the upside. I think you get over 184 easy at that point. But again, I still think NVIDIA is still one of the best opportunities out there right now. Do what you got to do there. Semiconductors, I still think, again, looking at today, real opportunity out there in the market as well. Again, they're definitely getting hit, definitely getting hurt. But I think when you buy the weakness on semis, it's been playing out very, very well over the past few weeks and months. So what I'd be looking at, what I'm watching, short video, have a good one, traders. Video coming out later tonight as well.